Jeff, I want to bring you in this conversation. What did you make of what the president had to say, specifically the idea of about what he says are commitments for $18 trillion of investments here in the U.S.?
What a sensational time to be alive, Frank, and it's great to be on with my friend Dan across the pond. But we see this U.S. exceptionalism really taking the next level up. So I get excited about what we're seeing in futures, and I think it's off to new all-time highs. I think we're going to see a great earnings season, and there's just more tailwinds. I know we had the Greenland hiccup, but here we are staring down the bears. The bears are going to be chasing new all-time highs in the S&P 500.
All right. One thing you pointed out is, Jeff, the decline in the VIX. It's back down to about 16 or so right now. It was up above 20. How meaningful is that for the broadening story that we've seen and also the confidence that investors could or could not have when it comes to investing in some other what were previously unloved parts of the markets? Right now, we're seeing people put money in things like healthcare, real estate, energy.
I think the VIX sets the table for the next 30 days. That is what is utilized to measure risk. And right now, we did see a flare up, but it came from 14, Frank. So that subdued level in the VIX is really telling. I think that sets the landscape for the next month to go to these new all-time highs. But right now, there's no fear in the market. There was an acute reaction. I saw it as an overreaction. It was an opportunity once again to buy some of the dispersion in the market. It is a stock picker's market. Look at Dan in that beautiful pink coat across in Davos, and this is the time to be picking stocks. It's not time to have broad swath exposure to sectors.
All right, Dan, I want to come back over to you. A lot of talk about the Mag 7 and some of the divergence there. You've shown a lot of confidence when it comes to earnings season. Which one of the Mag 7 names that have kind of underperformed? I'm thinking Apple in particular. Do you see a turnaround when it comes to earnings? Of course, those earnings coming up in just a few days.
Yeah, and look, Jeff always has great thoughts because I think it speaks to the backdrop. And when I look at Mag 7, I think the one you put an asterisk around, the table pounder that I think investors right now are just massively discounting, it's Apple. I think what Google was in 2025 will be Apple in 2026 because now in terms of monetization of AI, we see the Google announcement. I think you're not factoring what I think $75 to $100 per share just for AI alone, as well as the demand that we see, not just in China but in the U.S. It's going to be ahead of expectations. And look, go back a year ago. Google, no one would touch it. Today, they'll have watch parties for earnings. That's going to be Apple in 26.
I want to go back to an earnings from earlier this week. It was Netflix. Now, obviously, that's already passed. The stock declined after earnings. A lot of that was due to some concerns over the deal. But I want to ask you, Dan, is that foreshadowing possibly of some of the other earnings coming up? The fact that the company is using debt financing to acquire Warner Brothers Discovery, and maybe investors just concerned about the size of that deal. Is that going to be a theme potentially for the rest of the earnings season?
Look, I view it as, okay, it's out there. It's maybe a little bit of an overhang, but the reality is it comes down to, like, what does growth, what is CapEx, what does earnings look like? And no investors, Jeff talked about, no investor wants to be on the sidelines watching this 10, 12, 15% run up in tech. And that's my view. I think that's where you're going to get the opportunities. And look, the bears, they're always going to find something. But in my view, we have new all-time highs. And we talk about tech stocks are up 20% plus this year, and especially as AI revolution spreads, second, third, fourth derivative.
All right, we're just showing the Netflix chart down about more than 20% over the last 3 months. And Jeff, you actually bought some Netflix. We're talking options, though. You didn't buy the equity. What's the strategy here?
Well, the strategy is to sell the pops and buy the drops, Frank. And if you go back to my CNBC Pro article in December, we sold the call spread, meaning we captured when it went up to 104. Now that it has come down 25%, I want to sell puts here. So we sold puts and actually bought calls here at this $84 strike, trying to capture in the next month. But I think it's really interesting, and Dan talked about this broadening and the ability to be inside of tech. But what's the overarching theme that we're not talking enough about is interest rates. I know the 10-year moved a little bit up in yield this week, but the 10-year note is going lower. It's imminent. And I know we're going to get the appointee for the new Federal Reserve chairperson, but that is really a tailwind for the broadening of the stock market and for U.S. equities across the board.